Hey traders, Charting Man Dan of The Chart Guys. Before we get to the charts, we've got a free ebook on risk management by the wonderful Lamont. And as we know, risk management is essential for being able to stay in this game for any period of time. There's a link in the comments of this video. Click it and you'll receive that free ebook and learn all about risk management. It's essential. It's one of the pillars of being a successful trader, and you essentially figure out risk management through a lot of trial and error, but there's faster ways, like learning from those who've gone through the trial and error. So looking at the S&P 500, we had a rotation day today. Last week, it was very clearly strength. There was money leaving the financial sector. There was strength in gold, crypto, semiconductors, and big tech. And today, we started the morning with big tech consolidation, many names starting daily consolidation, and the financial sector, the energy sector, IWM, all these sectors that were weak last week got some bounces underway. And for me, that shows healthy rotation because we knew QQQ was due for daily consolidation. The NASDAQ just went straight up all last week. The consolidation is very healthy on the NASDAQ, and the S&P 500 was able to remain strong through that consolidation because the other sectors were bouncing at the same time. So keeping an eye out for that rotation because that's what bulls want to see to keep their control. As we know, FOMC is on Wednesday, and that's going to dictate a lot about the short term, and we can anticipate a very volatile reaction. And the reason we can anticipate a volatile reaction is because every one of the recent FOMC reactions has had the probabilities going into the meeting as very skewed. 80% chance we're going to see this. And we've always gotten the most likely scenario. And when you have the 80% most likely scenario happen, you have the market having priced in the majority of that already. But when you have something that's 60-40 or 50-50, and right now the market doesn't know if we're going to get a 25 basis point hike or if we're going to get a pause, and the market doesn't know whether we're going to be hawkish or dovish in terms of talk about going forward over the next couple of months. So we can anticipate that the market has not done a good job of pricing in the information that we're going to get on Wednesday. And so again, I anticipate a bit more volatile of reaction because of that. So S&P 500 holding on pretty well. I'm looking at this uptrend resistance line on the 4-hour time frame. And you could draw it as a channel. You could draw it as a potential rising wedge here a little bit. But I just care about the resistance right now because that's what we're heading up towards. And we see the NASDAQ is still very strong. Potential daily bull flag. So we didn't even get to hourly oversold conditions. We got fairly close, but ended up with a double bottom down at the low of pre-market. And that is what started the reversal from morning weakness. We dropped real hard on the morning, but we double bottomed, had a little 2-minute inverse head and shoulders that we were watching while I was live streaming. And that marked the low of the day. So nice follow through for the bulls. And again, it's a possible daily bull flag. As we know, the NASDAQ is still much stronger than the S&P 500. The financial sector does have a little bit of a bounce attempt going, but it's not very convincing at this point. We had a dividend distribution, so make sure you adjust for the dividend by clicking the ADJ in the bottom right-hand corner, and that's showing us the base of support is 30.74. Today was a daily inside bar. I spent my day shorting the financial sector, but trading much less, and I'm trading much less because I'm having dumb internet issues that are dumb. And dealing with the corporate ladder of trying to get that fixed because it's a node, it's not just a wire at my house. Long story short, I'm out of my routine. I've got to wake up, go to the trader house, live stream from there, and I'm out of my element. So I'm trading, last week I probably averaged maybe 12 trades a day. And this week I'm going to average, as long as I'm out of my routine, I'm going to average maybe 3 trades a day. And that's me being more picky and me recognizing there's a shift in my environment. I'm not in my ideal routine. I'm not in my ideal flow state. And I'm going to do a webinar next week. Yes, next Thursday, I believe. A webinar about habits, routine, flow state, everything. And this is going to be a great example of talking about that. So the short that I took on XLF, aggressive XLF bears going with the top fish attempt. QQQ would need to see 5-minute consolidation to help with the rejection. I was just watching how XLF and QQQ were trading very similarly to each other. We had the high of the day. I made that post right about there. So ended up grabbing that short. Where'd that post go? So giving the top fish a shot, I was out 1/3 fairly quickly and So the way that that played out is I entered the top fish. This is me exiting a third fairly quickly. We get a 0.3% pullback on the leveraged ETF. That's a 1% pullback very quickly. And so I exit a third. Why do I do that? Because now my break even is over the high of the day. And then you get a little bull break like this with no follow through, and that doesn't stop me out because I've got enough wiggle room above that level because I sold a little bit of that position. So then I sell some more into the weakness, and then at the end of the day, I ended up exiting. I watched this double bottom at the low of the day, and at the end of the day, I gave one more chance for the bears. Nope, all out the rest of that trade. So just scaling out slowly, trying to give the bears a chance to do something with it, but they didn't do much. I also took another short on KRE after this big dump. FRC was halting to the downside, one of these regional banks, and then we got this 15-minute bounce. What's the most likely scenario there? We know a 15-minute lower high is the most likely scenario after that kind of a drop. So KRE at 15-minute EMA 12 resistance, I'm going to look to top fish it when the 2-minute stair-step pattern breaks bearish. And so that 2-minute stair-step pattern broke bearish right here. So I short it right there. I wanted to exit partial at 2-minute EMA 12. We didn't get there. So my stop at that point goes over the high. And fortunately, we didn't stop out. And so we drop down. I exit a third of my position. Now I'm down to a half of my position. And then once the 15-minute, I did stop out a little bit premature of the remaining half of my position. I was anticipating a 15-minute equilibrium. So right here, I stopped out. And the bears ended up keeping control into the end of the day. But just a nice low-key day, knowing I'm taking a step back, and just a couple shorts when there were clear resistances right nearby. Both of those were top fishing plays. One of them was top fishing with the high of the day. One of them was top fishing with the high of the bounce at that point in time. I was more confident in the 15-minute lower high because that lower high was the most likely scenario. Whereas for XLF, I couldn't say that a rejection at the high of the day was the most likely scenario at that point in time, but because the risk is so small, I'm willing to take that chance. SMH still strong with tech, and tech today was really Microsoft was down big into daily consolidation after running really hard last week. Amazon was weaker with its daily consolidation underway. Trying to set these higher lows. Again, no major red flags, but the other, look at Apple. Apple just broke to the highest level in like 6 months or so. We had a resistance zone right around 157, 156.30 to 157, had 4 tops, and we just closed above those levels. That's a great sign for the Apple bulls and the market bulls overall. This is the 2-week inverse head and shoulders trying to confirm here, and it's confirmed by breaking the left neckline, or I should say the right neckline, and now we need to break. No, we broke both. Both necklines have broken. So that's a big vote of confidence for the NASDAQ bulls. Again, we'll see what the FOMC reaction is, but that is showing strength. And the semiconductors and NVDA both showing strength as well. NVDA pulled back on the morning. Again, nice. And we were looking bearish on the morning. We got a nice fast push down, but fairly short-lived. And tech bears and semiconductor bears need to be quick with their profits these days because these NASDAQ bulls are keeping their control. Tesla had nice relative strength on the morning. What's the number one reason you will see relative strength shift to weakness or vice versa? And the answer is when the key name, when the individual name hits a key level. So we had the high of Friday. We shot straight up to that level, very overextended, just with the 5 and 15-minute RSI real high. And we broke it by 22 cents. With the volatility that Tesla sees, that's a double top for me. And then the relative weakness was very significant. We topped out at 10:30. What was QQQ doing at 10:30? QQQ is right here. So while QQQ does this, Tesla shoots straight up to the high, and then it stalls out at its resistance, and then QQQ goes up for 45 minutes more while Tesla does that. And then when QQQ finally drops, Tesla drops really hard with it. And it's just a prime example of relative strength into a key resistance, then turning into relative weakness. And that's why these correlations, we have to stay on top of them because they're constantly changing throughout the day. And that's a really good example of one of them. Healthcare still sideways the last few days, not much going on. It was on the stronger side of things this morning, but it was up over 1%. So definitely on team bull for today. But again, bigger picture, I'm on the 2-day time frame. and still not much changed on this longer term downtrend. IWM is trying to build this same base of support as XLF. And one thing I'm watching on KRE, the regional banks that I forgot to mention, 4-hour equilibrium. So the lower the drop, higher the bounce, higher low, lower high, higher low, lower high. We're getting real tight. And maybe it's going to be the FOMC that breaks this here, but 43.14 is a key support in play tomorrow. And as long as the 4-hour lower highs keep forming, bears are going to remain strong. IWM, how does it look? Low, lower high, lower low, lower high, higher low. So we're tightening up to potential 4-hour equilibrium here. If we fail 177.38, we'll look for the 4-hour lower high and a continued tightening range. In the biotech sector, trying to shape up a daily higher low, double bottom with the low of Friday, but still some relative weakness there as bulls unable to do much with the decent amount of green out there today. So on the morning, we did see, energy, IWM, XLF all showing some green, but by the end of the day, it's, they held support, they got a little upside, but can definitely still go either way on these weaker sectors from last week. Riot, crypto name, 2 days in a row, oversold conditions on the morning with big bounces. Here's a bounce of 15% plus from 5-minute oversold on the morning on Friday. And we got a little bit more than just 5-minute oversold here. We double dipped into those oversold conditions, but a very nice, significant bounce. So bulls are still buying the dip in crypto. And a very notable difference, you can see Riot closing up there and MARA much weaker today. Double top with the high of Friday by 1 penny and then pulled back all day. So I could say MARA bears are positioned well if Bitcoin were to start daily consolidation. Still some great volatility in these crypto names. The dollar is still weak, so daily downtrend confirmed. No sign of a weekly high or low. I'm watching for a weekly high or low, anything above 182. And again, the FOMC is either going to push us down closer to that level or start to shape up the weekly high or low, depending on what the reaction is. But for now, the dollar bears are in full control. Metals looking a little toppy. Gold got some nice follow through to start the week. When futures opened, we got over 2,000. And all-time highs are in play. I mean, we got within 4%, less than 4% of all-time highs. And I have added to my decade-plus physical allocation of metals, just seeing the narrative and enough strength to say, I'm pretty confident gold's going to get some all-time highs again sooner rather than later. So we'll see if that remains the case, but 4-hour time frame, watching for the potential of, you can see we lost the 4-hour high or low, so watching for potential daily consolidation here. And again, tons of space for the daily high or low. We'll be watching gold for hourly back burner, first hourly oversold conditions. Silver has been weaker. You can see silver is a potential 4-hour head and shoulders here. If that were to confirm, we would zoom out and scout a daily high or low. But overall, still holding on fairly well. Silver's going to try and play catch up here. Let's see if silver can break bull while gold does not. XAU, XAG. If this chart breaks bearish, that's going to show us silver catching up to gold. Oil, I'm on the May contract, CLK, 2023. Bull's trying to put in a bottom here, building a base. Well, I was actually watching it as a 4-hour potential falling wedge because we saw a bear break straight into a little bounce and then another bear break straight into a bounce. That shows me bear exhaustion. And so looking at this downtrend resistance line, a few touches, we've now broken above it. So trying to get a daily oversold bounce going, and the next key resistance is going to be 69.83. If the bulls are going to prove anything on the daily oversold bounce, got to get over 69.83 on that May contract. Natural gas, still all bears. And again, we're just heading on down back to that low of 210. I would have thought a higher low was coming on whatever time frame, whether it's the 2-day or the weekly, but the bulls were unable to confirm a daily uptrend, and it's been full bear control since then. And so watching that 210 level, and that's really it. We've just got downtrends on a lot of time frames and 210 support. So that's where we stand heading into tomorrow. Again, going to be low key, waiting for the FOMC, waiting for the FOMC reaction, expecting a lot of volatility, reminding myself that we get the volatility of the the rate release at 2 p.m. We get more volatility likely at the conference after 2:30, but also keeping in mind that then leaves an hour and a half left in the trading day, and big money can't move around in an hour and a half. It's going to require Thursday and Friday for that significant shifting of capital to take place. Hope you all had a good day. Do good things. Check out the free ebook. Another nature and trading analogy. So having ponds in the yard is great. We've got a creek that goes through a PVC pipe to this pond. Then this pond connects to the other pond, and that goes back to a creek and empties out again. But that means that on a daily basis, I need to be ensuring that there is nothing impeding the flow of the water, because that's how things will get stagnant. That's how mosquito larvae will take hold. And so I have to come through and clear out sticks and leaves and things like that. So similar to our trading, we have to ensure that we're removing all blockages to our flow state. And by flow state, I just mean having a routine where we are comfortable and consistent. We're proving to ourselves that we can be consistent in this game, and we then have confidence derived from that. So anything that we can do to have that consistent routine where we are comfortable, we have to ensure that we're removing all blocks. So if I have a couple beers the night before, I know I'm not going to be in my ideal flow state the next morning. If your kid is homesick from school, that's going to be an additional distraction. You need to recognize the things in your life that are a little bit different than your normal routine and be able to either remove them or recognize that that's just the way life goes and take a step back to ensure that we're not trying to trade as if those blockages were not there.